Hey Jasper, it's great to see you here. I'm happy to be here with you. I'm Paul Hewitt, the Chairman and CEO of America's Gold and Silver, joined here by Oliver Turner, Executive Vice President. I'm going to have Oliver walk through the deck here with you, but obviously we're very excited to talk about our most recent acquisition in Idaho with the Crescent. So over to you, Oliver.
Thanks, Paul, and good morning, everyone. Thank you for having us on the platform, Jasper and Valpal. So I'll walk us through the deck here fairly quickly in the next 10 to 15 minutes, and then I know there's lots of questions that probably want to be asked, so we'll get to those as quickly as you can. So before we start, draw everyone's attention to the forward-looking statements that we have in our presentation. And right out of the gate, we have a summary of the key points of America's Gold and Silver. We're going to step through all of these over the course of the presentation, so I won't spend too much time on this slide here. But suffice to say that we're building a very meaningful silver and antimony producer in the United States, headquartered in Idaho. That's where our primary asset is. We recently acquired, as Paul mentioned, the new Crescent mine. We also have an operating mine down in Mexico, producing a significant amount of silver and copper. And we'll walk you through all the things we've done over the course of this year to initiate the turnaround of Galena and scale this company into a very meaningful silver producer. So starting off with the team, to my right here is Paul Hewitt, Chairman and CEO of the company. Began his career as an underground miner, spent the first 10 years of his career running a jackleg and working in Alimak raises, so has a huge amount of operational experience. To the right in the presentation is Mike Doolin, a 35-year, tenured metallurgist. We have Warren Varga as our CFO, and myself, Oliver Turner, running corporate development. Spent time on the sell side of the industry as an analyst and as a mining engineer prior to that. Stepping into our past successes, one of the most important things when you're investing in a management team and a new story is to see what they've done previously. And this group has had two very successful transformations of companies previously. Prior to America's Gold and Silver, we were the team that turned around Coeur Resources. It was a single asset in Western Australia called Beta Hunt with almost no gold production. We added 3 mines and 2 mills and sold that just last August in 2024 to Westgold for $1.3 billion. And prior to that, Paul and Mike led the turnaround of Klondike's Mines, which had a single asset in Nevada, no production, scaled that with 3 mines and 2 mills to 200,000 ounces a year of gold production, and sold that to Hecla. So the same strategy that we use at those two companies, we are now applying here at America's Gold and Silver, which is we're taking over an asset that has been undercapitalized and needs an injection of operational expertise. We've raised the capital, and we've just done our first regional acquisition that is highly synergistic in Crescent, and we'll continue to scale production out of both of those mines in the years to come. With respect to how we entered this story, it actually starts back in 2023. Mr. Eric Sprott, who is a very significant investor in Coeur Area and Klondike's previously, and also is here at America's Gold and Silver, he owned 40% of the Galena mine, our primary asset, which we'll talk about in a few slides here. He called Paul and asked Paul to help him out as a technical advisor as part of his joint venture partnership in taking a look at the Galena mine and how that operation could be turned around, similar to the past successes that we had at the two previous companies. Fast forward through over the course of the next year, Eric consolidated his 40% into 20% of the company. He is now our single largest shareholder and a big supporter over the course of the last year. We raised $50 million in October last year when we announced the transaction where we consolidated Galena. America's Gold and Silver now owns 100% of that asset. The new management team led by Paul, including myself and Mike Doolin, came in and have been driving the efforts here at Galena over the course of the last year. We closed that acquisition and that transformational consolidation in December of last year. We raised another $100 million in debt financing in June, of which we've drawn $50 million. And then just 2 weeks ago, we acquired the Crescent mine, which is just 9 miles away from us. So a lot has happened in the last year corporately, but let's take a look at what's happened at the operational level. So here are our assets. The primary asset is Galena in Idaho. That includes the Crescent mine, which is close to it. We also have the Cosalá operations down in Mexico, led by Gabriel Soto, doing an excellent job down there. And the Relief Canyon mine or a past producing mine, which is now in care and maintenance, and the San Felipe exploration project down in Mexico as well. We're going to spend about 90% of our time today talking about Galena and Crescent, which is where the focus of our efforts have been over the course of the last year. So this is taking a look at the Silver Valley. These are all the mines that are in the Silver Valley close to us. It's only about 20 miles from the left side of this page to the right side of this page. On the right-hand side, you'll recognize Hecla's Lucky Friday mine, producing about 5 million ounces of silver per year and one of their best assets. Circled in the middle there in white is the Galena Complex. We own all of those assets called the Galena Complex and all connected underground. And then just 9 miles via road to the west of us, you have the Crescent mine, which of course is in between Bunker Hill and Sunshine, which will be very familiar to silver investors. So a great place to be mining silver, over 100 years of mining history in this area. And mining actually began in Galena in the late 1800s. So definitely a workforce and a culture of mining in this part of the world, which we're very lucky and happy to be part of. In terms of the Crescent acquisition, as I mentioned, 9 miles away, we have the ability of restarting production there very, very quickly. In fact, I'm going to jump to this next slide here, which shows you some of the infrastructure that's in place. There's 3 adits going into Crescent. This was a past producing operation that produced over 25 million ounces at over 900 grams per ton. 2 primary veins host the 20 plus million ounce resource that's there today. We will be getting into this mine after we close that transaction in just, actually, I believe it's next week, we'll be closing it. We'll be getting into this mine and doing development work next year. And the idea is that this project, which will be a mine shortly, can contribute tons to the spare capacity that we have at Galena. We also have tremendous exploration upside. We'll be extending these veins potentially to the west on the property that we just acquired, and certainly be looking for other veins on the property as well. So we'll have an aggressive exploration budget starting here next year. But the most significant part of this transaction is the bottom right of this slide right here. You see the total capacity that we have at Galena. We've been ramping up production at Galena. We're going to talk about this in a few slides. We're now just over 400 tons per day at Galena, but we've got 2 mills on surface that are starved for feed. They really want feed, and we want to make sure that we get ore tons into them as soon as we can. So Crescent, which is the same material that we're mining at Galena, will be contributing feed as early as mid next year and then scaling up over the years after that. And we'll talk holistically about what this could look like, of course, with Jasper after when we're in the question section. But that gives you an overview of why we acquired Crescent. The last thing I'll say is we went out and we were targeting a raise initially of $65 million, which is the purchase price for this asset. We had tremendous demand from a whole new wave of very large new shareholders. And we ended up taking $130 million in total, but we had well over $200 million demand, which we were very excited about. And I think that indicates just how strong this acquisition was and how synergistic it is, because we'll be sharing a lot of the same vendors. We using the strength of our purchasing agreements to get equipment deals. A lot of the same staff will be working across both assets. So a lot of synergies here being just 9 miles away. Really, these will be part of the same Galena complex.
And I think, Oliver, I know you talked about it here, but I think it's really important to emphasize that the shareholders that have come in are predominantly, 85% of the shareholders that came as part of this deal are brand new. Their entry price is $4. So they obviously believe in the team, in the assets, and what we're doing. It's great to see new shareholders coming in, supporting us at that $4 level. Like I said, 85% of the book was filled with brand new names.
Absolutely.
And really good names.
Yeah, for sure. So here's a view of the last 25 years of production history at Galena. I mentioned at the beginning of the presentation, there's well over 100 years of mining here. But if we look in 2002 on the left side of this slide here, the record at Galena historically was just over 5 million ounces at tremendously high grades of 700 grams per ton and just over 600 tons per day. Over the last 10 years, this mine has been averaging around 1.5 million ounces. And there's a number of reasons for that. Metal cycles, a focus on silver lead ore versus silver copper antimony ore. We'll get into the 2 ore types a little bit later on. But as you see in the last couple of years, grades have started to ramp back up towards that 400 gram mark. And we're north of that today. This is a very, very high grade mine. In fact, this is currently the 3rd highest grade silver mine in production in the world today. And there's a number of ways which we think we can improve on that even further. So a strong production history, but what we're going to be focused on over the next several years is returning Galena back to that record production level. 5 million ounces per year is our strategy to get back there. And then we could talk potentially about taking it beyond there. But 5 million ounces, that's the bar we've set for ourselves. And I'm going to step into a long section of Galena that's going to tell you about how we plan on getting there. So this is the most important slide in the deck. And for viewers that are new to this, this is a long section of the mine. Basically, it's like slicing the mine with a sheet of paper right through it along all of the infrastructure. So up there on surface, you see two mills, the Galena Mill and the Coeur Mill. Everything you see on this page, we own. We own 100% of this. This is known as the Galena Complex. So everything you're looking at here as an investor is owned 100% by Americas Gold and Silver, particularly after we did that consolidation transaction. So over 1,200 tons per day of installed capacity on surface from a milling perspective, 4 shafts heading underground. That number 3 shaft that's in the middle there, that's highlighted in blue, that's the primary hoisting shaft for ore and waste. We've got over 100 miles of underground development, a very large resource, and we are going to be looking at optimizing the use of all of this infrastructure that you see. In fact, it would take over $2 billion today to put all of that infrastructure in place. So our efforts have been focused on 2 areas. Ultimately, what we've done in previous businesses is we take a look at what's going wrong in the mine or what can be optimized in the mine, and then we inject our capital and our operational expertise to turn it around. So 2 areas were bottlenecks in this mine. The first bottleneck was the number 3 shaft in terms of hoisting. The second bottleneck was the use of the mining method. So let's start off with the shaft. The first bit of work that we've been working on in that number 3 shaft has been in upgrading the motor. You'll see the phase 1 at the top of this slide right here. We upgraded the motor just a few weeks ago from 1,750 horsepower to 2,250 horsepower. What that does is it brings the hoisting speed from 40 tons per hour to 80 tons per hour. What does that mean as an investor? We've doubled the capacity of that shaft. Early next year, we'll be completing phase 2, which is adding a modern braking system, which then adds another 20 tons per hour. That triples capacity of the shaft approximately from 300 tons per day to about 900 ore tons per day with what we've been working on in the shaft. So that debottlenecks that primary shaft. The other area we've been focusing on is the mine. We see a lot of new equipment that's on this slide today. That new equipment we purchased with that first $50 million raise that we completed last year. That equipment is now operational underground, and it is allowing us to execute the transition from 100% cut and fill mining, which is the graphic you see on the left there. That is a labor-intensive, higher-cost method, but a method that's been used in the Silver Valley for a very long period of time. We are now switching the mining method at Galena to a mechanized, more productive mining method called long hole stoping, which you see on the right-hand side there. That's a 7,000-ton stope that we mined extremely quickly. In fact, we mined out the stope in approximately 1 month. To do that amount of tonnage with the method on the left would take you close to a year. So dramatically increasing productivities, lowering costs, improving safety, all the things you want to see happening in a mine. That transition is all underway at Galena. And one of the important things to note about what we're doing here is it's not new to the Silver Valley. When you look at our neighbors to the left and to the right of us, remember that's only 20 miles that you're looking at across the screen. Lucky Friday, which is Hecla's mine to the right of us, which is 2 times the depth of what we're currently mining. They're using a modified long hole method called UCB. So this is being used very successfully by our neighbors in the Silver Valley. And that's what we're going to be implementing over the next couple of years, ramping up long hole stoping at Galena. That allows us to get the tonnages up that hoist that's now debottlenecked. And that's how we start to scale operations back to that 5 million ounces per year. We've also had tremendous success with the drill bit. As I mentioned, this is already the 3rd highest grade silver mine in the world, but we've drilled off new areas, including the 34 vein and the 149 vein, with just phenomenal intercepts. I don't need to read all these out for you. You can look at them at your own leisure in the slide deck. But we're mining areas that are about 450 grams per ton right now. This is 2 times the grade of what we're mining and 3 times the width of what we're currently mining. So bodes well for future mining. We've also been hitting some phenomenal veins and intercepts right next to existing infrastructure, as you see on this page here. 24 kilograms per ton silver and 17% copper. Certainly exciting for investors when we get into those areas and start mining. And those widths are areas that we can mine narrow using that long hole stoping method. So all of that is within our capacity. The other area to touch on at Galena, as we scale silver production, along with it comes antimony, copper, lead, and gold. And none of them is more significant than antimony. This mine has produced antimony since World War II. It has a long history of producing antimony, 8 decades of producing antimony, and we're not stopping it. Every time we mine a ton of ore in what's called tetrahedrite ore that has silver, copper, and antimony in it, every time you mine more of that silver, you get with it more copper and more antimony. So earlier this year, we renegotiated a new offtake agreement with Teck Resources. we've transitioned the byproducts at this mine from being penalized to now being payable metals. Previously, this company was only paid for silver and lead. Now we're getting paid for silver, lead, copper, antimony, and gold. However, very interestingly, and something that Paul was focused on just last week, he was in Washington, D.C., meeting with the U.S. government. We are evaluating adding a new antimony circuit to the Silver Valley. For many years, Galena's antimony went next door to Sunshine's antimony circuit. However, that circuit was decommissioned. We're looking at building a new antimony circuit, potentially in the Silver Valley, and that will allow us to maximize the payabilities that we have for antimony. Certainly very exciting and something that we want to do for shareholders, because this comes essentially for free, because we're already mining these tons. It's already coming out of the mine. We're already concentrating and shipping it. We might as well maximize our payabilities for antimony. And just as a reminder, for every pound of antimony of copper that comes out of this mine, you get 1 pound of antimony. We've already produced over 450,000 pounds this year without a strong focus on it. So certainly exciting for shareholders to take a look at that. And as a reminder, we get 99% plus of recovery. So just excellent metallurgical performance. But again, you don't need to focus on these test results. We've got decades and decades of production history at this mine. So certainly something we're going to be pushing forward in parallel with the efforts that we're working on at Galena. In terms of Cosalá down in Mexico, we'll touch on this and then we'll wrap up with a view corporately of the company. As I mentioned earlier, this mine run by Gabriel Soto and the team down there is doing an excellent job. We are into a new exciting area called EC 120, which is a higher grade silver copper area. This mine will produce north of 1.5 million ounces over the course of the next several years here. Tremendous exploration upside. This asset hasn't seen a real exploration program in north of 5 years. So we're going to be injecting a lot of exploration dollars into this area. And this mine continues to generate cash for the business. And we're really proud owners of it. So excited about what's going on down there. While we're scaling operations in Idaho, Galena continues to be the steady state producer. That's the backbone of the company. Slide here in terms of taking a look at grades. As I mentioned in the top right here, we're the third highest grade silver mine. By the way, everything you see in this presentation as an investor is silver only. We're not talking about silver equivalent. This is silver only. All those byproducts are in addition to this. So we have the Galena Complex at 466 grams. That's a blend of the silver lead ore that we have, which grades about 200 grams per ton silver, and the tetrahedrite ore that I mentioned previously with silver, copper, and antimony in it. That grades over 600 grams. That gives you that blend of 466. To the left of us, as you see on this chart here, you have the Crescent Silver Mine, which is the same tetrahedrite ore that we'll be mining. So we're excited to get that into the mill as well. In terms of exposure to silver, the silver metal, as an investor, when you invest in a silver mining company, you probably want to get leverage to the silver price. We currently generate over 80% of our revenue from silver, which is the second best in the entire producer landscape, of which, of course, there aren't many options. So very strong leverage to the silver price and a great place to be investing if you're excited about the prospects for silver, as we certainly are. Valuation slides, we can talk about this in general, but we're still undervalued for the growth that we have ahead of us. And when you look at where some of our peers trade, certainly exciting upside here for America's investors. And then I'm going to wrap up on this slide right here. We have some tremendous new institutional investors and retail investors as well. And we're very excited to talk to Jasper and Val Powell about some of the investors that follow this channel. One thing that's important to note when you're investing in a team and in a company is we are very aligned as a management team. We put all of the proceeds that we made from selling Coeur and then some into this company. We bought those shares ourselves. As a management team and a board of directors, we own 10% of this company. So very aligned with shareholders. We have some new analysts that have launched coverage on us, 4 new analysts over the course of this year, doing an excellent job. So recommend you read the research. And we continue to build a very strong shareholder register. In fact, we've taken institutional ownership of this story from 7% to over 70% in just 1 year. And we continue to add more and more strong retail shareholders as well. So with that, I'm going to wrap up the presentation, and I think we'll jump over to some questions with Jasper.
Yeah, so I guess we start with, could you give us a history of Americas and how you did get involved? And
Yeah, Jasper, I think Oliver touched it at the very beginning. Back in 2023, Eric Sprott, who owned 40% of the Galena mine at the time, tapped me on the shoulder and just asked if I could come and be his technical advisor. If you remember back then, at that time, Oliver and I were very, very engaged at Coeur. In fact, there was a bit of a sale process with 4 companies that had begun. And during that time, as Eric's technical advisor, I was able to really start understanding some of the problems or some of the opportunities that were in front of it. So trying to identify what it is that needed to be fixed and looking at solutions. This is what we do best. We're fixing mines is what we do best. So for us, this was an easy lead in, but having that exposure that full year before was very, very important for us to make the decision. Because look, the reality is, Jasper, when we sold Coeur, every one of us had different opportunities. Myself, Oliver, Mike Doolin, the entire team could have gone different ways. We chose to stay together. We chose to do this one more time. And because we believed in the opportunities that existed. When you see a mine going from 5 million ounces to 1.2 million ounces, well, you got to ask yourself, how did that happen? And can we fix it? Can we restore it? Not only are we going to restore it, we're going to make it beyond that 5 million. We will get to that number, but we will supersede and beat that number. Of that, I have no doubt, because we have the entire complex.
So, the acquisition of the Crescent mine, post-acquisition, what will the financial position look like with regards to cash and debt?
Yeah, so look, at the end of the year with the financing, we're going to end the year with a strong balance sheet, the strongest balance sheet ever, very close to 135 to 140 million US. We will have an undrawn $50 million facility on our debt. And what we're going to do is reevaluate our entire balance sheet in the new year and start looking at what's the best thing for us and our shareholders. Look at the best use of those proceeds for us and our shareholders.
Perfectly. And is the credit facility and what's the maturity of it?
Yeah, so the SCF facility that we had that we signed in June is a 3-year facility, and as Paul mentioned, we've only drawn 50 million of that. That was a $100 million facility, but we've not drawn the second 50 million yet. And the terms of that were disclosed in the press release. I'll draw investors to take a look at those terms. But as Paul mentioned, we'll have a very, very strong balance sheet here. Obviously, a lot of the capital is being injected into Crescent and the work that we're going to be doing over the next couple of years here. But we'll be evaluating our whole balance sheet and optimizing things over the course of the next couple quarters.
Excellent. And finally, on capital structure and financial position. So what's the strike price matured of the 8 million outstanding warrants?
They're all of the 8 million warrants strike around $1 to just over $1.10. Those get chipped away on. There's a couple of years left in terms of maturity on them. Obviously, those come into them. Every week. Actually, we get redemptions there. At the beginning of the story, when we took over a year ago, that was very significant for us. We were getting cash quite a lot from those warrants, but obviously we're in a very strong position now. Those will all be exercised in times, but given the strength of our balance sheet, obviously the execution of those doesn't change our future in a big way like it did at the beginning. It was very important in the beginning, and we're fortunate to have them, but there's about 8 million of them left now.
Okay, so the Crescent acquisition, could you tell me, how did this come about, and could you also motivate the price that you paid?
Yeah, look, so when we start looking at some of the best successes we've had in the past, we've always looked at consolidating districts. We look at Klondex, you look at Coeur. You look at our plan here. When we first came here and started looking at Galena, we wanted to not only revive the number 3 shaft, but we wanted to look at the Coeur shaft, the Calais shaft. Anything within that 20-mile district that Oliver was talking about, it makes sense to consolidate these. Anytime you go get an MBA anywhere else in the world, you'll get a case study. This is a great case study that you would use for how textbook synergies work. We get to share the G&A, we get to share vendor costs, we get to share we get to share the mill. We get to fill a mill that's underutilized immediately right away, and we'll be adding ore. Like in Q2 of 2026, we're going to be adding ore into our mill. Like, you can't find anything that close to us that has the same metallurgy, mineralogy. There's no batching this. This is being blended, commingled together. So it is the same identical ore. We couldn't have asked for a better setup ever. So the fact that it was presented itself, we knew about it from the beginning. We were very patient about it, and we were able to negotiate a price and get it done.
Awesome. Okay, so could you just summarize here? So what work and also capital investments are necessary to start mining in Q2? And
So one thing that Oliver did talk about is the amount of amazing infrastructure that's there. Look, I went to the mine 7 times in Q3, Q4 of 2026. If you come visit that mine, you will see there's a complete brand new adit that was done in the early 2000s on the top. There's a second adit, then there's a third adit, then there's a complete shaft infrastructure. For us, what we're going to do is restart the mine, is put in ventilation, rehab some areas, and then connect the mines together. There's actually 3 adits. So when I think about this, there's tremendous opportunity to be drawing ore from all 3 of those. But if you connect them and draw the ore all the way to the bottom and run it through the track, that's a tremendous advantage. It's never been done before, but it is certainly something we're going to do. So we'll be spending capital right out of the gate on drilling. For 15 years, that thing hasn't seen 1 drill hole. So we were starting off with 23 million ounces in resource. That's just the beginning. When the 25 million ounces were mined there, they were a lot closer to 980 grams. Very, very high grade when that deposit was mined. So we're going to start drilling. We're going to connect the mine, put in ventilation, put in secondary egresses, getting the mine restored because there's so much infrastructure. There's close to $1 billion of infrastructure that already exists at this mine with those 3 adits. And we did get a mill as part of this deal as well. We don't talk about the mill a lot because we're not going to need it out of the gate. We're going to be using our own mill, which is a big part of our synergies here. But getting the drill turning there early on is going to be very, very critical. Our geology team was so excited. One of the things, when I walked the tunnels and I walked the drifts, we were able to walk on the ore and follow the ore and go right to the face, right in the ore. And there's a lot of exciting stuff. But my geology team was so excited because of the fact that this thing hasn't been drilled in 15 years. So there's tremendous amount of opportunity. And there's no doubt this resource, stay tuned, it will be growing. And we'll get the drills turning early on. And we're going to start test mining very early on in 2026.
Could you give some sense of timing on when you will, is it early Q4, is it more mid-year next year that you will actually start doing, I guess it's called commercial stope mining?
Yeah, so we have to comply with MSHA, and the biggest thing is putting in the secondary egresses. That's what we have to do. And to do that, we have to connect all those tunnels. So it just allows us to make sure our miners, when you go into production, when you call it commercial production in the United States, you must have 2 egresses. And at the moment, there's not 2 egresses. We'll put in refuge chambers. Look, we're obviously very, very focused on safety. But as I said early on, one of the first things we're going to do by connecting these is putting in ore passes, but then putting in secondary egresses. So all that's going to be occurring in Q1, Q2, but we'll start test mining immediately and extending the levels. That one of the first days I went underground at Crescent, I walked up to a face that had stopped mining. I took a chip sample, I grabbed the grab sample, we put it to the assay lab. The next day it came back between 15 and 17 ounce per ton. We're talking 500 plus gram, almost 600 gram silver in the face. That was in the rock face that I just chipped the sample from. So we're going to be going there and about 6 other areas because there's 3 full levels already on ore that exist that we're going to be able to start extending. And when we go to the other adits, we'll be able to pierce into the vein there as well. So we don't necessarily have to start stoping immediately, Jasper. You generate ore from the development, and that's very important. It's important because we're not just burning cash. We're actually generating cash from that development ore as we're understanding the mine a lot better and building it up so that we can long hole stope it.
Okay, so essentially, or in Q2, you should be able to perhaps start processing development ore.
Q2, you'll start seeing ore tons coming out from Crescent into the Galena Mill, which is, look, that's not very far away. We're November 28th here. Yeah. It's coming up really, really quickly. So we will close the deal hopefully next week. So we don't even have the deal closed yet. I suspect early next week or maybe the following week we close the deal. So in December, we close the deal. We get the keys at the end of December. It's Christmas time. Then we hit the ground running early January with a new team. that we've already got positioned to go out there with, led by Mike Kernick, one of our narrow vein experts, and Evan Peltier.
And could you give some sense? Obviously, still you need to do some work, but some sense of, I mean, what you're targeting long term. I don't know what that is. End of next year, maybe for in terms of throughput, and also give some sense on what this could mean in terms of actual silver production.
Yeah, well, this is an easy question for me, because when I think of having 3 adits, and I think of some of the things I've done in my lifetime at Beta Hunt, at the Midas Mine, at Fire Creek, at Hollister, each adit can contribute quite a bit. Getting 500 tons for each of them, that's not unrealistic at all. That's not unrealistic at all. If you're getting 1,000 to 1,500 tons, and that's in the future, that generates quite a few ounces. We're targeting 1.4 to 1.6 million ounces out of the gate. But could this thing do 2 million ounces per annum? Absolutely. There's no doubt in my mind, no doubt whatsoever. Could it do beyond that? Well, let's get the drills turning. Let's get the infrastructure in place. Give us 6 months here, and things will change. Things are going to change as we continue to drill and understand this a little more and modify our mine plans.
Obviously, you have hauling costs, but that's relatively close. So, should Crescent have a similar cost profile to Galena?
Yeah, there's no doubt it should. So it's going to be part of the Galena Complex, right? It's so close. Like, the truth is, I've got one guy running it. The ore is coming right to the Galena facility, so it's part of the Galena Complex. So the AISC cost will absolutely be in line or better. And when we start seeing some of the numbers or the revenue from the antimony, the copper, the gold, lead, our AISC costs look a lot different. And when we're doing 3 million to 5 million ounces, look, sub $10 an ounce in the future, very, very realistic for us, very realistic to have AISC in single digits for our operations and for a very long term afterwards. That's what we're doing. It's not about we're not trying to do a 100-meter dash here. What we're doing is putting in infrastructure and mining methods and teams so that it's sustainable, Jasper. We got to be able to do it not just one quarter. We're known for delivering quarter after quarter after quarter, and you have to build that momentum and then sustain it. So you get this, 7 million ounces per annum, 10 million ounces per annum. You want to be able to sustain that at an all-in sustaining cost of less than $10 an ounce. Very realistic. Putting in the systems in place, the mining methods, making sure the drilling's ahead of it, the waste of all those are very key to making sure we sustain that. And it's not a flash in the pan where you go, oh, well, that was a great quarter, and the next 3 quarters are half of that. It's about building that momentum and consistently delivering quarter after quarter after quarter.
And how will you be doing? I mean, obviously, the M&I resource and inferred resource all have, silver grades above 600 grams per ton. How do you think a grade dilution will impact that?
We were able to show you. You saw today. You saw it in the pictures, and if just look at the picture of that stope. We mined a long hole stope in Idaho, 1 meter wide, 3 feet wide. Even if I was running, I ran a jackleg for over 10, 12 years of my life. That's what I did for a living when I started my mining career. We could not mine that narrower running jackleg. So our dilution is so minimal because we're able to mine so narrow. Some people, the minimum mining widths are 10 feet. We're talking 3 feet wide here, Jasper. So if the vein is half a foot, so what? We've got some areas where the vein is 10, 12 feet wide. So our minimum mining width will be that 1 meter. To constrain that and drill it and blast it and make sure we're mining that, you will see our grades will hold and they'll stay very high because we're focused on mining ounces and not tons.
By the way, are there any significant byproducts here at Crescent?
Well,
yeah, so Crescent is the same type of ore that we're mining at Galena, which is that tetrahedrite ore. So at Crescent, you will also get copper and you will also get antimony. Of course, it's going to take some time to quantify what that looks like in terms of the contribution, but it's the exact same ore type. So that ore will be heading over to the Galena Mill and mixing with the tetrahedrite ore we currently mine. So the answer is yes, copper and antimony will be coming with it.
So essentially, the core area or the core shaft, that is, you're not mining anything from there right now.
So look, Jasper, that's a really good question. The core district, part of the Galena Complex, currently today, we're using that as a secondary egress. So our men are able to go down 3,400 level. It's connected to the Galena shaft. It's all connected, which is very, very powerful for us. But what we're going to be doing in this year, in December of this year, Evan and our team there and Mike Kernick, they're going to be putting in a motor on the top of the core shaft. So just like we did earlier this year, we've got a replacement of the motor on the top of the core shaft. That will allow us to start moving men and material and start skipping. It's been a secondary egress for now. It's got a small motor, so we can't skip up and down. We can't move tons. We could evacuate men, but we need to make this more of a production system. In order to do that, step one is get the right motor on that shaft. And we're not only are we going to have a motor on the top of that shaft this year in 2025, we're going to have a spare. For the first time in history, we'll have a spare at the number 3 shaft. We're going to have a spare motor and then a spare motor at core, setting ourselves up for next year. So again, it's all back to what I've been saying about making sure we can do this consistently. Well, instead of just mining from one shaft, we'll be going to core shaft here in 2026 as well. And that's a whole new district here. We've been drilling it. If you look in our slide deck, we've shown some of the results from the drilling. We've been able to drill there. We have not been able to mine there yet because that shaft isn't ready. But we will be ready in early January.
And are there any differences in terms of mineralogy grades and ore types here at core compared to Galena?
No. So that entire system for us is a tetrahedrite type ore, where we produce a copper concentrate or a lead concentrate. And in this case, Coeur, Galena, and Caladay are all part of the same system, just like Crescent. Crescent is 9 miles away, and in between us is Sunshine, and all that system is the same geologic system.
And the Coeur Mill, is that... when do you expect that could come into use, and what refurbishments are needed?
Yeah, so I think the first thing to recognize is the fact that we have it. We have it. And a lot of people, Jasper, don't even realize. They're like, well, what do you mean? You're mining at Galena. We have a second mill, the Coeur Mill. It's sitting right on top conveniently of the shaft that we're about to put a motor on this month. We have a mill on the top. To get that mill up and running is quite easy for us. In fact, that mill gets started up every quarter. We run and rotate the mill. There's a bit of work to get it started up, but until we get that feed consistently at 1,000 tons a day with the Galena mill, we're going to keep the Coeur Mill on ice. We're going to have it ready to go, and we're going to start it up when we have more feed. So it's, maybe at the end of 2026, we might do it. Or we do get a lot of calls. We often get calls about toll drilling, toll milling. So we get often calls on that, and that's a great opportunity for us to say, look, we don't have to commingle it with our ore, and let's start looking at some other opportunities in the district. So that mill, don't ever underestimate the value of that Coeur Mill and us having it fully permitted, built, ready to go, and able to turn on whenever we need it.
No, there sure are a lot of mine workings and old deposits that could probably would love to have a mill, use a mill here in the area in Silver Valley. But okay, the Galena mill, 750 tons per day capacity, but that, it sounds like from what I'm hearing, that you could quite easily upgrade that to maybe get up to 1,000 tons per day in the future.
Yeah, look, there's no doubt the Galena mill is already 750 tons a day. We have a ball mill sitting there that could add another 300 tons a day. And I've never met a better metallurgist in my life than Mike Doolin. So once we get the tons from Galena, Coeur, and Crescent, and we need that extra flow, we'll be commissioning that other ball mill that is sitting there, by the way. It's sitting there. We have the ability to do 750 tons a day now. Remember, when we got here 11 months ago, Jasper, the mill was running at 2 days a week. You think about a mine that's been here for decade after decade. The mill's running 2 days a week. Those fixed costs, people are still there 7 days a week. We're running the mill 5 to 7 days a week already. And we have the ability to increase the capacity in that mill from that 750 to over 1,000 tons a day.
And how do you expect, so if we just look at Galena and Coeur, just exclude Crescent essentially, how do you expect the mining rates to increase over the coming call it coming year?
So it's a combination of a couple things. So first thing, it's changing the mining method. We've shown you that we've taken out a long hole stope. In order to get long hole throughout the mine, that's not going to happen in 1 year. Maybe by the end of 2026, 40% of the mine is long hole. By the end of 2027, 65 to 80%. We're going to do it as quickly as we can, but in order to get those rates up from where they currently are, and we've already done that, by the way, we inherited about 300 tons a day. We're north of 450 tons a day. We'll be entering the year close to 500 tons a day. Those are big step ups. It's change the mining method, step one, and that happens over time. You don't flip a switch in a mine and go, that thing's been mining with jacklegs for 100 years, and all of a sudden, all the infrastructure is perfect for long hole. That's not true. We've got to set it up. The equipment we have already bought. We've purchased the equipment. We've brought a lot of it underground. We still got a couple scoops to take down. And then there's a paste fill plant, a very important part of the process. In order to get our stopes to cycle at the right pace and the right speed, we need to backfill. And we're going to be doing essentially what our neighbors are doing. It's a long hole with fill above your head. And it's going to be either or. Some areas we're going to have fill below our feet. Some areas we're going to have it above our head. But it's a long hole method either way. So once we get equipment, the paste plant, and the mining method, you will see quarter after quarter, just like we did. Just look at the history of Coeur. Somebody mapped out what did they do at Coeur. We were at 25,000 tons a month. We went to 30,000. We went to 45,000. We went to 60,000. We went to 80,000. We went to 100. That occurred quarter after quarter after quarter. That's what's going to happen here. As we continue to debottleneck the operations by putting the motor at Coeur, we've already put the motor at Galena, changing the mine method. Those are such critical things that the asset was so starved for capital it couldn't do before.
With that, with higher throughput and also improve optimized operations, how do you expect all-in sustaining costs to vary and gradually come down? And what's sort of the long-term goal? Right now there are $30, or at least last quarter were $30 an ounce.
Yeah, so that mine's been obviously trending down over the course of this year as we implement some of the things that we've been working on. Look, one of the key things here, of course, we don't have official guidance out yet for the coming year. We'll be putting that out in early 2026, but you'll certainly see costs continue to trend down as we scale mining rates. You'll certainly see byproduct credits start to contribute more, so you'll see that drive down costs as well. As Paul mentioned, earlier, we have the potential for this operation to get down to that sub $10 mark. That's an extremely competitive asset on the cost curve comparing to other assets. So there'll be a trend down over the next several years, but that's ultimately where we're targeting.
Just to understand, so are you currently producing a flotation a copper concentrate, or will you do that from the start of next year in January? With antimony in it.
Jasper, I think it's really important that people understand we are already producing. You are correct in that statement. We produce a copper concentrate and we produce a lead concentrate because the system has two different types of ore, predominant two types of ore. But we produce that every day. We're mining 500 tons a day. The antimony comes in that copper concentrate. We're doing it day in, day out. I think too many people will underestimate the value of that antimony. Oliver just said I was in Washington, D.C. I had some phenomenal meetings in Washington, D.C. The antimony is absolutely required in the U.S. The fact that we're producing it day in, day out already in our concentrate. Our concentrate has anywhere from 16 to 19% antimony in our concentrate. So I think a lot of people are going to be a wait and see, but they forget that mine's been doing it for 80 years. The mine's always been producing antimony. It used to be a penalty. It's changed so much in the last even 10 years here now. So it's very encouraging. The original meetings we had with working with the government collaboration, it has been very exciting for us and for me personally. I'm excited to see what it can do for our costs and for our shareholders.
So from January, you should start to get paid for the antimony, and I guess also the copper, although that is not as significant.
I think the big focus is on, we renegotiated that offtake agreement, and until we had to do it at a point in time, and it's January 1st. You're correct. We not only start getting paid for antimony, we stop getting penalized for it. It sounds kind of odd, and you're like, well, I don't understand, Paul. Well, up until December 31st, I'm actually getting penalized for my antimony, which is a shame, but as soon as you go into the next month, the agreement changes. We get paid for antimony, we get paid for copper, we get paid for gold. We were not paid for those elements before. This is going to change. Now, there's still more opportunity with the antimony. We're getting paid. We're not getting penalized, we're getting paid. But we've proven we can get 99.8% recoveries on it. We know we can get that. It's been done before. We've just recently done the test work. We're not getting paid that full amount yet. And that's something that we believe is a tremendous opportunity for us to really focus on in 2026.
So could you give some sense? I mean, obviously you can't maybe disclose the exact pricing, that varies, but do you have offtake, do you have essentially a set price, or is it a percentage of the, there's no real spot price, but there must be some kind of future price. Yeah.
So you're not wrong, but unfortunately, Jasper, given the group we're working with, which is a great group, by the way, Tech Cominco are a fantastic group. We are not able. I do not have the freedom to discuss our rates because they're so large in size that the rates might be different for different clients. So unfortunately, we don't have that freedom to discuss what our offtake agreement rates are.
Do you have any sense that you could, what this could mean in terms of revenue or cost, or how we should think as an investor think about this?
So one way to look at it is, look, Oliver talked about potentially putting in an antimony facility. We've done some original work at today's price. If you use today's antimony price, and we're using, I think it's $22 to $24 a pound right now. In our own internal model, if we're using $20 a pound, it could be about $40 to $50 million per annum just in antimony. And I'll leave it at that. It's very, very meaningful. You start talking about 5 million ounces per year, that's $5 an ounce right away, right off the top. And what does that cost us? It doesn't cost us anything because we're mining it anyhow. It's coming out already, Jasper. It's coming out of the mine in the ore. I'm taking it out for my silver anyhow. So for us, this goes right to the bottom line. So, I've given you a really good number there. It's about right around $50 million per annum of reductions we can see. Those are big numbers.
And when do you expect to know more if building an antimony circuit or not is something that you probably will go out?
Listen, we've been here 11 months. We haven't been letting the grass grow beneath our feet here. We've been moving pretty fast in 11 months. But that antimony facility is extremely important to us. It's extremely important to this administration. You go speak to anybody in Washington, D.C., and there's a lot of support there on the fact that someone has to do something. The fact that we're already producing it is quite beneficial. So expect us to be discussing this at length in the next, not only month, but next quarter. We'll be discussing it quite often here. The first 11 months, we weren't that focused on it. And I get asked questions all the time. Why didn't you talk about the antimony then, Paul? Well, it's easy. We had just got here. We had to focus on getting Galena straight. Our mine in Mexico was running well. We've got a really good team there. Our mine in Idaho was starved for capital for so long. It needed a leadership team. We were so focused, laser focused ourselves. Myself, the rest of the team, we were so focused at getting the mine to a position where we felt, look, it's on the right path now. We've tested longhole. We did the first step of the shaft. We've doubled the capacity of the shaft. We brought a whole bunch of equipment down. We brought in a new engineering team, a new leadership team. Those things were so important to us early on that we weren't as focused on the antimony. So I get asked this all the time. Well, why now? Why now? Well, again, been here 11 months. The first 10 months, squarely focused at getting Galena working to where it should be. And for us, that's the only way every company we've ever been part of is successful, is when the mine works. When the mine is performing well, it's safe, it's operating consistently month after month after month, it's generating free cash flow, it's doing what it's supposed to do, our lives change a lot. Our lives get so much easier when that mine is running smoothly and delivering on its milestones. So we are squarely focused at getting that, and we have been. That's why we hadn't had the time and commitment to devote to the antimony yet. Now that we are in a more comfortable position, and we're giving more autonomy to the group on site, we're pivoting and focusing on the other opportunities that exist in front of us.
Exploration for next year. Will you focus on all three areas, Coeur, Galena, and Crescent? And what are the key objectives essentially?
Yeah, so it's completing what we've started, right? And we've talked about that. It's about doing phase 2 to the number 3 shaft. It's about getting operations coming from Coeur. It's about reviving Crescent, getting the mine operation, getting the ventilation in, getting the ore pass and the secondary egress in, and start extending on the veins, and then adding feed from Crescent into the Galena. Now, look, I've got an objective. It's quite aggressive. I've said to the team, 1st of May, I'd like to see ore from Galena, from Crescent into the Galena mill. And let's be honest, that's quite aggressive. You start looking at other operations, they're a year, 2-3 years. I'm talking 2-3 months, guys. I'm saying I'd like to see ore from that facility in there after we've gotten all the infrastructure right and the secondary egress in place. So we've got a very aggressive plan to get feed to the mill as we're changing the mining method.
From a company perspective, what are the key capital allocation priorities?
Yeah, so obviously it's going to be getting this work done at Crescent, getting it set up, putting in those drop raises between levels so that we can move ore using gravity, not necessarily just trucking down the side of the mountain that was previously envisioned. So that Crescent has a huge amount of capital that's being dedicated to that and getting it up and running, and everything else that Paul talked about there. At Galena, we continue to make that transition into additional long-hole stoping. And the key project next year, in addition to the second phase of those shaft upgrades, is the paste fill plant. So that paste fill plant will be beginning construction in January, targeting having that commissioning in the 3rd quarter. And that allows us to really scale that long-hole production. Obviously, as we scale long-hole production, there's additional equipment that gets deployed. There's waste development that has to be completed. And then you asked the question just previously, look, we're going to be aggressive with the drill bit. So we'll continue to explore across both those assets.
And look, I want to really, really emphasize on what Oliver said in the last point, drilling. We will be drilling. These assets have been so starved for capital. What a tremendous opportunity. Organic growth from within. Drill at Coeur, drill at Crescent, drill at Galena, drill in Mexico. Every one of our properties have been underfunded for capital for so long. That presents a tremendous opportunity for us to be drilling, and we will be doing a lot more drilling, and you'll see that transfer directly into the share price as we continue to find. You look at some of the areas we've already found that were within our infrastructure. That 34 vein, it's 3.4 meters wide, 983 grams. Oh my God, man, that's 3 times the regular width, double the grade. It's right next to us. So you start finding areas like that, you start mining that and making that part of your blend, your life changes pretty fast.
So then the ultimate question here, where do you envision America's gold and silver at the end of next year?
Yeah, I mean, in next year, we're executing the strategy, right? Paul mentioned it right at the beginning. If we don't get the mine working, nothing else matters, right? So that's what we're heads down. We're focused on scaling Galena. We're focused on getting Crescent up and running. We're focused on starting to realize some of those synergies that we talked about across the 2 assets. So those are our 2 areas we're focused on. Cosalá continues to execute its transition to EC 120. So making sure that we execute operationally, making sure that we deliver positive news to the market. We're going to put out guidance next year as well, so investors will have guidance. So all things that we want to make sure that we focus on.